All right, so welcome back into the live stream today. Let's dive into exchanges, kind of the state of the industry overall, especially from an aspect of where should you put your crypto, how should you go about it, and what are some of the steps you need to take to be safe out there in this world of innovative finance. My name is Paul Barron. Welcome back to Tech Path. We're going to dive into all this today, run down quite a bit of the exchange comparisons. And, over the weekend, we've done a ton of research over the weekend, as well as a lot of testing, trying things out, looking at different angles on exchanges, looking at transfer rates and fees and withdrawals and all those kind of things that everybody kind of always bypasses in the past. And one of the things that I think has done a job on a lot of the everyday investors here, at least today, right now, when it comes to crypto, is everybody's radar is wide up and open, and you're being a lot more due diligent on double checking some of the things. Now, what I will say today is you're going to find out some stuff that looks a little questionable, and especially when you put it in the context of additional research. So when you start to put the puzzle pieces together around some of these exchanges and some of these brokerages, it makes you start to ask a lot more questions. And what we've done is give you guys kind of a checklist, and I'll show that to you today on the show, that you should always go through on any kind of financial investment, at least especially when we're talking about crypto. So let's dive into a couple of things. I'm going to get into Voyager. We'll talk a little bit about the FDIC insurance, the blog post that they put up, which was months and months ago. Also a statement that came in from Metropolitan Bank over the weekend, and then something called a class action waiver. I'm going to get into all those details, and we're going to do this with each one of these exchanges. We're going to try to answer all of your questions. I'm going to be going through Binance US, so you guys can kind of know, stick around for that one. Gemini, if you're a Gemini user. We'll also look at crypto.com. We're also going to take a look at FTX, Kucoin, Coinbase, Robinhood. We're going to give you the full Monty here, so it's going to be a good one. Let's get into the first thing I wanted to jump to, and that is after Friday's news, Voyager, of course, is the one that is on front and center. At least it's their time up to bat. I think we're going to see more of this, but this was a blog post that was placed back in December of last year, 2019. And USD held within Voyager is now FDIC insured. And there's a lot of sidestep verbiages, and I've had a point-to-point discussion with the CEO of Voyager, Steve Ehrlich, about this very issue. And I even went back in and looked at my interview in the past. And though he kind of answered our question when we directly asked that, when you look at it in the context of today, it was a sidestep to the question. Even though there was a lot of kind of trying to read between the lines, a lot of this is really now boiling down to the fact that Voyager does not have FDIC insurance that is pass-through insurance, meaning your dollars are deposited within Voyager. They then deposit it in a bank account, think of it that way, at Metropolitan Bank, and then you get that insurance as a pass-through to your deposit account over on Voyager. That is not the case on Voyager at all. In fact, over the weekend, Metropolitan Bank issued this statement right here, which is FDIC coverage available to Voyager customers. Voyager customer funds held by Metropolitan Commercial Bank are insured by the FDIC up to the maximum amount of coverage per depositor under federal law. The standard FDIC insurance coverage is $250K for a depositor. The FDIC insurance coverage is available only to protect against the failure of Metropolitan Commercial Bank. FDIC insurance does not protect against the failure of Voyager, any act or omission of Voyager and or its employees, meaning what if they did something wrong, or in the loss in the value of cryptocurrency or other assets. Now we're talking about US dollars here, but basically what they've said, and I think they headed this off at the pass, of simply saying, if you're a Voyager customer and you had US dollars in there, we are not securing that as federal deposit insurance, and hence you are at risk as much as anyone else. So that is a big blow, but it also goes in the face of what Voyager was trying to, I don't know if they were trying to insinuate, if this was an attempt at trying to make you feel better about your investment with Voyager, and especially around US dollars, or what's going to go on. But what I think is going to happen now around all exchanges and any kind of new product that comes to market from here forward, because of what's happened in this bear cycle, is we have seen the king has no clothes for sure, in the sense of being able to really see how these companies are operating. Further, I want to get to this right here. Obviously, they suspended their tradings. This was the breaking news last Friday. I think we were one of the first shows to break the news. We actually were on our way out that day and stepped back in and said, wait a minute, we've got, huge news. This is something that you guys should be paying attention to on Friday afternoons. This is a tactic that's been done in the press industry, and I've been in media for 25 years. The press and PR agencies will use the weekend to bury leads. And eventually, what that does is it softens the blow to a brand or entity, because the weekend doesn't get that ramp up. Now, usually Monday morning you get the follow-up. By then, there's too much other news. In some cases, it can actually get suppressed. With the crypto market only being $1 trillion right now, this is one of the big forefront topics. So, didn't necessarily affect it too much. Furthermore, what I want to jump to is the fact that Voyager has also put a component within their EULA, their user license, end user license. These terms contain use of certain disclaimers and limitations on our liability and our binding arbitration clause and clauses and class action waiver, which waives the right to sue in court or seek a jury trial for disputes relating to your use of our services. So essentially what this is a waiver that every Voyager user has essentially signed by agreeing to the terms of, and this is something that many people don't realize, when you go into any kind of service online, there's an end user license agreement. These EULAs are very important, and unfortunately a lot of people do not read them because they're very lengthy. And sometimes even when you do read them, you completely gloss over certain sections, and these are the kind of things that show up on this. So there is a problem with this, because in this particular scenario, it's possible that a class action may never make it to Voyager's desk. However, I was looking at classaction.org and also had a consultation with an attorney this weekend just to kind of get a framework of what is up if this were to go to those kind of scenarios of a user trying to get their funds back. And when you look at what classaction.org is talking about, class action waivers are often hidden in the fine print of customer agreements and other documents signed by the customers or employees. Credit card companies, banks, employers, among others, will try to get these waivers to limit your ability to file class action. If you signed a class action waiver, you still may be able to file a class action lawsuit. This is because the courts often rule that class action waivers are invalid. Now, this is something that may depend, and I'm not an attorney, so I'm not giving you legal advice, but it may depend on where you live. So check your state laws, get with an attorney. I'm not saying that people should consider this, but it is something that you should be aware of in these kind of scenarios. And sometimes, I know a lawyer costs money. We will try to bring on one of our access to some of our legal experts to talk about this very topic, because I think this is going to be something that we'll start to continue to see develop over time for sure. And I think a lot of people are just kind of still a little bit shaken and just surprised that we saw this to this level. And what I mean by that, not that Voyager suspended trading and withdrawals and deposits. I think everybody kind of knew that would eventually be coming. It is these practices of your US dollars are safe with us. That kind of practice to me is just not acceptable in our industry. And I think we're going to see a lot more people drawing people down to the mat on answering questions when they're asked dead on. The other one I want to cover is going to be Binance. Now, Binance has some very interesting limits here. There are withdrawal limit, deposit limits and withdrawal limits, but you can deposit up to $7.5 million via bank wire or withdrawal, and up to $1 million via bank wire. One thing that they don't do with wire transfers is they don't hold your funds. So that's a big advantage. Now, when you guys are moving money from a bank to an exchange, there's usually a couple of options. Sometimes it's ACH or Plaid, or sometimes it is the wire option. What I always recommend is use the wire option because your funds are there immediately. There's no lag time. So in these volatile markets, when you're trying to do very quick trades, wire is the only way to go. It might cost you a little bit with your bank. Maybe your bank is free. I'm not kind of curious. And maybe you guys could kind of answer in the comments and let me know what you're getting, in terms of your wire fees and things like that from your banks. Are they free? Are you charging for them? Kind of that scenario. Make sure and put your comments over or questions over on the sidebar. We'll try to get to as many of those as we can. Also, we have coming up in our 3:30 live stream is Gareth Soloway. We're going to be doing a breakdown on Bitcoin and some of the macro environments that could we be seeing a possible recovery, or could we see the anticipated push down to 14K? So make sure and stick around for that one. If you're not subscribed here to the show and to our network, let's just go through that right now. First hit the like button, and then next up is subscribe to the channel and turn on that little bell, because you'll get notified when we do some of these drops on our live streams. And we're trying to do a lot more of the live streams because there's just so much news and really so much analysis to break down in each one of these. I want to get into Binance right here. So ACH limits and USD deposits and withdrawals. Deposit up to 7.5 million on bank wire transfer, withdraw up to $1 million via bank wire transfer. We do not place funds on hold, which is huge. I think this is something that I've found very interesting. The other thing you'll notice right here, right there at the top, I want to kind of highlight this, is once you've linked your bank account via Plaid, remember, let me zoom up on that. Once you've linked your bank account via Plaid, you'll be able to deposit up to 5,000 in ACH deposits daily. Now, what I recommend, guys, is do not use Plaid, all right? Because Plaid has just go research Plaid. It's kind of an unknown technology and company that basically is a go-between between banks and institutions and other entities. The reason is when you engage Plaid into your account, they have full control of your account, sending money, receiving money, deposit. I mean, it's like basically you being inside your account. So when you are in Plaid, just be very cautious about where you're engaging Plaid. I know it's easy, and I know it's comfortable, it's fast, and it feels like this is all good, but when you're looking at these exchanges on a much more closely scrutinized level, these are some of the things that you have to pay attention to. And wire transfer, in my opinion, is right now the only way to put your US dollars into an exchange, should you choose to go that route when you're ready to buy. Now, still, I think the safer bet is if you've been able to get into some USDC, parking USDC in a spot, whether it's a wallet or a secured storage, and then deploying USDC because it's instantaneous in most cases, and you can immediately trade on it on the weekends. All those kind of things can happen versus a wire transfer requires a bank, and non-holidays, and it does require you to get it in before the bank clearinghouse times on the day of. Otherwise, it rolls to the next day. So just some things to be aware of. Also with Binance, this is something that is also a very good sign, and that is fiat is in fact a true FDIC pass-through insurance. Now, what they mention right here is pass-through insurance up to the per depositor coverage limit, which is the $250,000 eligible. This is what it should look like when you're working with these exchanges. Again, these are market movers. Number one thing here, guys, is always I want you to do your own research. I want you to dive into whatever exchange that you feel is the one that's right for you, but it's not investment advice. The key here is it's bringing you guys up to the top of the food chain, I think, in terms of education and just awareness of what's happening in the marketplace. But back to Binance's disclosure here. FDIC pass-through insurance protects your funds against the risk of any loss in any U.S. bank where we maintain custodial account fails. Now, my question on this, again, because of that statement, is whether or not, what if Binance were to go down? Does that include it in the overall? This is where I feel like you have to have people actually look at these in a much deeper dive position. What we're going to do is we're submitting these EULAs to our own attorneys, and we're going to have our attorneys take a look at these, tell us which ones of these are the best ones from a legal advice standpoint. We'll probably end up doing that something in our Diamond Circle, which is where it is, which by the way, join the Diamond Circle right now. It's free. You'll get those kinds of videos and breakdowns. We do interviews, courses sometimes over there, and it is free to you guys. So be on the lookout for that. Let me further on into here, because there's something that was kind of, okay, here it is. The balance associated with your Binance fiat wallet will neither be affected nor will transfer of funds from the U.S. bank to another to jeopardize the availability of FDIC, subject to applicable limitations. Now, I'm not sure what that statement means, but the way I read that is that this means that they can't move it around and start putting it in different Harbinger accounts and different kinds of ranges so that your funds aren't protected potentially, so they're never at risk. That would be my big question here. The other thing here that we've got is I always look at some other aspects to this, and this is trading volume. Trading volume right now on Binance, if you look at the daily, let's look at over at the week, has been holding fairly well. We don't have the day for the finish up for the week there. You can kind of see the monthly. This is the not the current right now. Volume is at on July 4th on Monday, but this will be out. You're looking the previous day. There's July 3rd, 285 million. So Binance seems to be holding along with, now there's a few of these that have not been holding in overall trading volume in some of these exchanges. And we'll show you some other things around all this. Don't forget, smash the like button right now, and because this is another way for us to get feedback from you guys. If you like these kinds of breakdowns, or if you want more of them, because we do a lot more deep dives and research on these. I want to jump over as well to take a look at one thing I will say though before we jump into Gemini is that with Binance, if you're not already in Binance US, it takes several weeks to get through KYC. It's just whether they're lined up over there. The process is very, very methodical. It is definitely not something that is easy to pass through. So just be aware of that. Don't get frustrated. Even with entities, which by the way, if you do an entity and you have a personal, you're going to need to set up almost a complete different identity. What I mean by that is you need another phone number because your phone numbers are connected to the other accounts. I've done this with Binance, so you've got to be able to do both accounts if you want an entity. So if you're a business owner, or maybe you just have an LLC and you're trying to do something that way. Again, check with your attorney and your tax and your CPA, because those will help you on understanding how your tax position and your overall position is in investments as you continue to build on your investment strategies, which really for me, this is great because it is a lifetime of education that you're putting into your own brain right now that's getting you ready for the next cycle. Whether you're 30-something, 40-something, 50-something, you're going to continue, especially if you're a little bit older, you're getting a chance to really exercise your brain a lot because this whole new asset class of crypto is recreating a lot of the knowledge that you've grown and built on throughout the years. So I think it's a great time to really kind of go through these exercises with everything you're doing in investment. And we talk about it a lot because it is your money, and a lot of people sometimes just get so lazy with this. I want to get into Gemini. Gemini is one that is a little bit different. I will say this, that if you are in Gemini right now and you were in the earn program, in other words, you were getting that, that juicy earn on Gemini USD or on USDC or maybe on Axie or some of the other tokens that they do some really good job on earn. When you convert that earn amount to move over to your fiat wallet, you're going to wait some time. So it is an issue with Gemini. It's a lot slower there. So just be aware of that. Now, there are some things here I want to show here on Gemini that are where they get into. One thing is that it is not pass-through insurance, which is one of the things that you have to kind of be aware of. And also the other thing that you have to concern yourself with Gemini is, again, on the withdrawal limits. And I'm trying to pull up the one. I didn't see it on here. I'll look and see if I can find it before the end of the show. But the withdrawal limits are very clear. There are some limitations on withdrawals and what that looks like for you guys. So make sure and go through the user agreement at Gemini, because there's some big key things you'll need to watch for as well. And there's a tons of variations within them because of the fact that they have different capacities. And this is pretty common right here when you see all of the states listed in there, because that's a common issue right now. We have a lot of states that have some different variances. That's if you're in the United States. And I know a lot of our audience is internationally, so it may not apply to you for a lot of these things. And remember, this is mostly for U.S. customers of a lot of these exchanges. There are other, platforms out there that you can utilize as well. Many of you guys are going to probably talk about those. We're going to try to get to as many of these as we can. One thing to look about on Gemini, let's go to their 1 month, and you can kind of see their volume has pretty much stayed, under the circumstances, has been holding on fairly nicely. Haven't seen a tremendous amount of diffusion on their overall volume, because that's always a concern that I have. I'm going to jump to our slides in a second to give you guys kind of a breakdown on what you should be watching for. And this is something that we've kind of created as just a checklist. And here's what I want you to do. Take a screenshot of what I'm about to show you here on screen right now. So if you're listening on the podcast, first thing I'm going to say is get over here to the YouTube channel, guys, because I can't convey this stuff easily enough on the audio side of it. And we're doing so many charts and stuff. This is really where you need to be. Get on the YouTube channel, search Paul Barron Network, hit subscribe, you'll find us and all that. First thing is, do not get into staking programs where it's locking your tokens up, or any of your projects at all. Stay away from those for now. I think it's just the safe. For most of you can already know this. The other thing that I think you have to make sure of is these whitelist approval periods. Crypto.com kind of launched their whole scenario where you have to wait a 24-hour cycle to get a wallet approved before it's going to basically whitelisted, before you can actually use it as a transfer wallet. So that's something that to me is a very, very big red flag. Also, no ACH deposits. We just talked about it earlier. Use the wire transfer model if you have it available in there. Make sure that it does have SPIC and FDIC pass-through insurance. And I'll talk to you about what SPIC is here in a little bit with Robinhood, why that might be an option for you as well. Don't buy a token unless you can withdraw it. And the key here is, if you look at Polkadot, Solana on Voyager, those were you could not withdraw. You could buy them, but you could not take them out. So you can't even move them to your ledger. So that's something to be aware of, is if you are going to get into some of these. And I know it's token chasing, but in some cases you have to move around to a variety of exchanges. These are the kind of things you have to be watching for. Don't buy a token unless you can withdraw it. And then number 6 is the high daily withdrawal limits. You need something that is going to allow you to be able to move funds in larger amounts. And maybe for you, a larger amount is $1,000. Maybe for you, a larger amount is $100,000. But whatever that is, make sure your withdrawal limits are capable of handling your own personal needs with that exchange. Because if they can't keep up with you, then you're already at a disadvantage. And there's some things that you should be aware of on all of these. Let me jump back over here to Crypto.com. Now, Crypto.com is pretty straightforward. Crypto.com, let me kind of just zoom in on this. What they're doing is they're using, this is not FDIC insured. Crypto.com has secured a $100 million direct insurance policy led by ARC Underwriting, Lloyd's Syndicate 2012. This is a largest coverage that Crypto.com has secured for its cold storage assets. So these are the assets that are out there. New policy brings Crypto.com's current insurance, cryptocurrency insurance, up to $750 million. This is not, to me, this is pennies in comparison. So this in itself is a problem when you look at Crypto.com overall from a currency side. Now here's the withdrawals issue that you have. And one thing you've got to look at is this right here. 24-hour withdrawal lock on newly added withdrawal addresses. So every new withdrawal address that you put in there, 24 hours. Please be advised that when the network you are using for the withdrawing or the token is different, whitelisting is mandatory. So that's another issue that you are going to be facing when you are starting to move around on networks. Again, these are things you guys should be aware of on a day in, day out basis, and then always watch for EULA updates. And those are another thing that I'm always very cautious with, is these private updates, or they send you an email that says, hey, our terms of service have been updated, and they bury it in something else. And it gives you a click here kind of thing to where you can go read it, but they've given you a public statement about that. Pay attention to those things in your email. Always be looking for terms and services or terms and conditions or the end user license updates. In taking a look at where crypto.com is going, if you look at their weekly, this is the concern I have right now, is that we are seeing some declining trading volumes right now on crypto.com, which is pretty significant in terms of comparison to other projects out there. So just be aware, this is another one that we are watching very, very closely. Lastly, I want to get into, or not lastly, actually I've got a couple more, but I want to get into FTX. FTX is, again, not insured via FDIC. So this also disappointed me when I saw this and really took a deep dive. Additionally, they have the class action waiver in their clause as well. Their withdrawals have a lot of challenges because there's some limitations there. And then the trading volume, we'll take a look at each one of these. So I want to jump to the first thing. This is, again, the user agreement for FTX. I would recommend everybody downloading this. It's pretty easy to get to. If you'll notice up here, it's just termsofservice.pdf after the FTX.us domain. But you can get into each one of these and really dive into what is available. And again, maybe this is something you want to go through, read. If you don't understand it, get to a legal professional and say, does this work for me? Does this make it work with what I want to do? And give them your situation, because everybody is a little bit different. Furthermore, deposit and withdrawal limits. This is another one that kind of surprised me. Tier 1 accounts are limited to 10,000 in crypto and fiat withdrawals per day and 300,000 in lifetime withdrawals. So U.S. individuals with Tier 2 are not limited in their crypto and fiat deposits or withdrawals. For a full breakdown, you can go to the tier structure in on that. So make sure and check your tier structure with your FTX account and go in that direction as well. The other thing I want to take a look at is FTX on their trading volume. Seems to be holding right here. So again, sure, they had some, 4.7 billion, no problems right here. So very, very active right now. I think FTX is being used as one of the core platforms for trading on an ongoing basis. I also want to take a look at Kucoin, because Kucoin is one of those, again, that there's quite a few people that talk about it, but Kucoin does not have a license to operate in the United States. Now, they can still, there's a lot of people that do that. It's not like it's illegal. It's just a situation that it doesn't have any kind of backup nets, FDIC scenarios like that. So there is no FDIC insurance on Kucoin. Just be aware of that, guys. Not that that's a big deal. Some of you guys, Paul, I never put in US dollars. I'm always using, Bitcoin or whatever I want, USDC or Tether or whatever it might be to trade. And in those kind of scenarios, many of these situations don't apply anyway. It's only when you're putting in US dollar dry powder that you compare some of these FDIC issues. Then you have to look at the withdrawal limits, some of the trade habits and tactics that they're utilizing, these whole issues around these class action waivers, which I think is terrible to have these in here, but definitely happening. Now, Kucoin, though, I will take a look at and say that their volume limits have been dropping considerably. When you had about 1.5 billion right here on June 30th, here you have July 3rd at 922 million, considerably down, and way down right now on Monday, July 4th. Maybe all of that data has not been reported just yet. But again, this is coming over from nomics.com. Whew, man, this list is getting crazy. The others I want to cover is Coinbase. Coinbase does have pass-through FDIC insurance. So if you are parking US dollars on there, you at least have the same type of pass-through opportunity there. The thing I would say is in Coinbase, I want to kind of highlight some of this real quick. Let me zoom in. U.S. customers, Coinbase, custodial accounts, U.S. banks, invest those funds in liquid U.S. treasuries, good. U.S. denominated money market funds, good. Funds could be held in any one of these three manners, so customers should not assume that funds are being held in one manner or the other. The extent of U.S. customer funds are held in cash, they are maintained in a pooled custodial accounts. So I think that's good. Our custodial accounts have been established in a manner to make pass-through insurance available up to the per depositor coverage limit. Again, good. This is a good thing for pass-through. Here's a list of the insured depository institutions which they use, which is Signature, JP Morgan, Cross River, Silvergate, and then MetaBank. All these are pretty good and respectable banks out there that are in it. So again, another scenario, Coinbase is actually looking pretty solid right now overall when you look at the breakdown of some of these things for sure. Make sure and get your questions over on side. We'll try to get to some of those. Last up is Robinhood. Now, Robinhood is a little different because it doesn't have the capability of holding a stable coin. So you do and only have the ability of going with a fiat conversion. So the scenario with fiat with Robinhood is getting in, it's a $50,000, I believe, daily limit in and out for fiat. The problem, if I had one for Robinhood, would be the ability to move the tokens out. And the problem there is they give you a 5,000 daily crypto transfers. That to me is really low. So if you're not moving more than 5,000 to your ledger or to another account or buying something else, not a big deal. But if you have anything that's, if you're wanting to move over 5,000, I mean, if you just bought a Bitcoin, I know that for some people that might say, hey, Paul, that's 20 grand. But think about that as you accumulate, all right? So let's just assume that you've done this over a year and you've accumulated a Bitcoin. It would take you days to move that Bitcoin out unless you were frequently keeping on top of that. So at least what you should be doing with Robinhood is making sure you're on top of where you are. If you are doing self-custody, just be aware it's going to take you some time to get in and out here. The other thing is make sure that you, and it says it right here, and most people aren't in this, but make sure that you are not doing cash sweep. So because that is a big issue with the scenario on some of these insurance situations. And also what you're dealing with for FDIC and SPIC, which is different because that's securities versus federal deposit insurance. And it gets a little bit crazy, but right here, Robinhood Financial LLC, member of SIPC, which protects securities customers from its members up to $500K, including $250,000 for claims for cash. So you're going to get protected even if you are holding stocks or other assets. My question is, does this apply to crypto? We're doing more deep dives on that to really take a look in on that one. I'm kind of curious, are any of you guys using Robinhood to make any of their trades? Because they're completely free trades. And I have found that their pricing, when they go out and shop that price, it's very, very competitive. So the spread isn't really large. I'm just kind of curious what you guys are doing out there. Here's just a quick rundown on FDIC versus SPIC. What you're looking for in Robinhood situation is what they call the Securities Investor Protection Corp. It's basically for any trading account or a brokerage firm account. So if you've got TD Ameritrade or Robinhood or something like that, those are SP or SIPC versus FDIC, which are depositor accounts. So just be aware of all that. Good stuff. Hopefully this is going to give you guys a lot to consider as you're building or maybe considering jumping into more exchanges because of certain limitations for sure. Before we get to a poll, I just want to swing back to our checklist again, just to reiterate this. No staking, no whitelist approval periods. You don't want those. No ACH deposit. Use the wire transfer. Make sure it has some sort of pass-through for your dollars insurance. Don't buy a token unless you can withdraw it or move it. And then you need some withdrawal limits that work for you. So just make sure what those are, meet and exceed your needs and expectations. Let's get over to a poll and then we'll take a few questions. All right, currently in the process of moving your crypto out of exchanges until the things cool down. All right, 50% of you, 75% of you saying you're either already in or out, or moving. So that's good. That's self-custody. That means you are definitely part of the Diamond Circle and part of our crowd. That's a good number, I think, but I'm still concerned about you 27%ers out there. Because you should not be going down with the ship, guys. I understand that it's easy to do, but you can get a ledger for like $80, all right? It's worth it. Even if you only hold a handful of tokens, getting those onto self-custody is the smartest thing you can do right now. We talked about this on Friday. Hopefully you guys spent the 3-day weekend doing this, getting your self-custody going. It is, to me, it's the ultimate. Listen, it's why crypto was built. It's why blockchain was built, is this capability of moving assets without the need for these third-party issues. So that's the only thing I could say. 27% of you are hoping in a month when we do this and we do another poll like that, that's down below 10%, hopefully. Let's get over some questions. How expensive is it to buy crypto direct through your Nano Ledger? It's about 3% on the exchange if you buy. You do have to KYC on your ledger. I've done it just to try it. It is a 3% fee. But if you think about the times that maybe you're moving, remember, there's only limits about what you can buy. Crypto typically on the ledger is Bitcoin and ETH. We could see some other things in swapping for like USDC into Bitcoin, USDC into ETH. Those kind of things are capable as well. But one thing I would say, guys, is that you can move so quickly. If you're holding USDC on a ledger, you can move that over to an exchange, make a buy, because remember, it's immediate. It's not waiting for a wire. It's not waiting for an ACH. It's not waiting for anything. It's there. It's a stable coin. You buy your token, whatever that might be, flip it around, and send it right back to your ledger. It's another 2 steps, maybe another 30 minutes or 45 minutes that you have to be watching your wallet exchange happen. But other than that, it's too easy. Michael, is it too difficult to teach my parents how to move their crypto on a ledger? It is not. I have taught many people now, people who are completely tech illiterate, and they were able to figure it out. In fact, they liked it so much, they felt like this was the only way to do it. Why is this? Have we not been doing this all the time? So I think you can get there. MMKX, come on. We've got to get you into self-custody, my friend. I want to convince you that you need to do self-custody. Hit me on Twitter. I'll DM with you. I'll walk you through it, whatever I need to do, but you need to get to that level. My thoughts on Kraken. Kraken is one that I've been in and out of. It's another one of those fringe exchange. I shouldn't say a fringe exchange. It's just not one of the big titans out there. So just be careful on those. I'm not saying anything bad, anything good. I'm just saying depends on what your situation is. But if you follow the guidebook of what we just gave you, and if it meets that, then okay, you're probably all right. But my guess is it's probably not going to. What exchange does MicroStrategy use to buy Bitcoin? He does not use an exchange. He uses a thing called an OTC, which is a direct desk to a lot of these exchanges. He's not going through an exchange. It's called an OTC buy. Completely different. Completely different. He may even be going up the chain right now as well. Robinhood. Also, yes, they do stock. They do, obviously, they're a securities company first and kind of a crypto company second. But we are going to see a lot more activity coming in from Robinhood. Yeah. Oh, by the way, on the ledgers, we have a discount in a link below, so you can get a discount on those. It's like 20% off. So if you don't have a ledger or something, not an ad. This is just a referral link that we use. We get a little kickback for that, I think for every 4 people or so, which is great, but it's a 20% discount to you guys. Clearly need regulation on Franklin. I think we're going to see it especially on the stablecoin side of things, Franklin. Let's see here. Reading sketchy things about USDC. I don't know. This came out over the weekend. Jeremy Allaire, their CEO, immediately came out. And to your point that you're talking about, Syed, is that when a CEO has to come out and say something like that, because we saw a couple of CEOs come out this weekend. Kucoin CEO came out this weekend saying, hey, everything's safe. Jeremy Allaire, the CEO of Circle, came out, said, hey, it's better than ever. It's something to pay attention to, because you just can't blindly go into these things. So you have to pay attention to what's happening out there, but also get it from reputable places that have multiple research teams, or they're doing a lot of insider communication. So they're getting back channels for investigative stories, or they're just doing executive interviews like what we do. I'd love to get Circle and their team on our show. If you guys are listening in right now, let us know. Send an email to us, which is producer@revernetworks.com. We would love to connect. Is Uphold covered by the FDIC? I do not believe so. We did not break down Uphold, but I do not believe they are. Thoughts on Uphold? I have had an account. I have moved everything out of that. onto my ledger in different places. So just something there. When will we be able to draw funds from Celsius, Voyager, or never? I think, Syed, I don't know. I look at it this way. I had funds in both in scenarios, and I just look at it as if we get money out of this thing, count ourselves lucky, whatever percentage, whether it's 10 cents on the dollar or the full dollar. I think either one of those will surprise me. Now, Celsius is making a lot of moves over the weekend, paying off some notes, trying to push their overall liquidation down on Bitcoin. That may be a good thing. It also might just be pure self-preservation. So I don't know that that's good for depositors just yet. I'm highly skeptical, but a little bit optimistic, because I'm just an optimistic kind of person. Fred, let's go to you, or Freddie, let's go to you. That disclosure law needs to change. They're unethical. It's not good faith contract disclosure. I would say to you is that these kinds of things, we're probably going to see more and more pushback coming in the next bull run. We're going to probably see a lot more people pushing these kind of buttons into the exchanges. Because remember, in this particular cycle, I think the exchanges got away with something to where people weren't fully aware of all the potential pitfalls that could occur. In this bear run, we are talking about just about everything under the sun has started to occur. The only thing that we haven't seen is a major exchange fall. Not that that can't happen. So when that happens, I think we're going to continue to see a lot more pressure on these guys to do it right. Thoughts on Gemini? I'm a customer of Gemini. I like them. I do not like this waiting period between earn and fiat. That is no bueno. And I hope the Winklevoss guys are listening in, because I think that has to change, and it needs to move into something that is very, very clear on how that works. WS, is iTrust Capital safe? Remember, iTrust is a different kind of animal in the sense of length, because you don't put something in an IRA expecting to get it out anytime soon. You're putting it in there for 5 years, a decade. Those kind of scenarios are quite a bit different. They operate completely different. They're not designed to be in and outs, where an exchange is, I need to always be liquid, meaning I want to sell my token right now. I want to come out today. That's an exchange. When you get into something like a crypto IRA, I look at that as you can do that because of the penalties. It's crazy, and it's completely opposite of what you're trying to do, which is long-term investment to grow that direction. Nexo thoughts, Ed. I don't know. First of all, Nexo is doing a lot of stuff, and this is really interesting because they're making plays at Vald, which by the weekend over the weekend, Vald also stopped withdrawals. Nexo's making a play at Vol to try to pick them up. They also tried to make a play for the loan assets of Celsius. I also look at that as saying, well, sometimes it's wave over here because nothing's happening over here kind of thing. So I'm always skeptical of those kinds of early moves. Just be watching, especially when they're public. So again, this is just the journalist in me. I catch those things and I question everything. David, let's go here. Been so afraid of hackers and phishing when the biggest scammers are publicly traded exchanges. That's funny you said that, David. It feels like that, right? It does feel like that. It feels like banks. It does feel like banks. I don't know about this. I'm beginning to question this whole theory of why people would use exchanges other than just to do a quick trade and in and out. That's my new mantra for the model, which is self-custody all the way. Jump into exchanges, do your trade, move your token, continue on about your day, pay your fees, which we may see fees go up. And I will say that is that fees may start to go up because of these kinds of scenarios where these premium advantages. I would like to see another thing from exchanges is start to offer premium services. And that means more security, more disclosure and openness, and more transparency. And I think people would pay for that because, listen, we're already taking it on the chin right now when we stick fiat into a bank at 8%, possibly 10% inflation. And we're dealing with no fees coming back to us, and every nickel and dime fee you can imagine at a bank. So think about that throughout the year, even when you're getting free accounts. What kind of fees are you paying throughout the year? I track that quite a bit. I'm surprised always at the end of the year on how many bank fees we pay. All right, guys, listen, we're going to have, like I said, we're going to have a 3:30 stream today with Gareth Soloway. You don't want to miss this one. This is going to be breaking down the charts on Bitcoin, Ethereum, and whether or not this is the perfect place to buy, or do you wait, or what's your strategy? So don't miss that one. Make sure and tune in. Hit that subscribe button, and we appreciate you guys jumping in. If you want to reach me, it's out on Twitter at Paul Barron. We'll catch you next time right here on TechPath.